Okay, folks, welcome back. Okay, we're looking at the dollar index, and we've had that move we were watching and waiting for 101.60, and that was where the buy side liquidity was prior to it now being here. So we've ran through that area, took out those buy stops, and we retraced it all the way back down. Now we're just above the bullish order block that was seen here. Now, I shouldn't have to tell you this, but we've already hit this down candle once, twice, and I don't believe there should be any kind of strength or buying at that order block, okay? It shouldn't be seen there. If it does have any response, it would be at this level here. And at this point, I think it would be just a rather short-term bounce or pause at this point. So that would be in the form of 145. So 100.45 is the level. You'd have to have your charts showing. That's close enough. So that's what we're looking for the dollar. So obviously this gives us reason to expect it to potentially roll all the way through and take out these candles lows in here where the sell side liquidity is resting below the bodies and below the wick. So inside here, there's sell stops in the area of 100.20 to 100.10 in that area. So we still have a little bit more downside on the dollar. But also, that puts us inside of this order block again, which we've seen only really one little tap into it here in this opening we trade down to as well. So it may need to trade to the mean threshold of this candle. So we could see price trade to here. Okay, so it's 99.95 to 99.90 on dollar index. So that would be a mean threshold return to this last order block that's bullish. That was the last down candle right before we saw this move up. So I haven't counted the dollar bulls out yet. We said that we would probably stay inside of a range, and this is pretty much in line with that. But on the short term, it does provide bullishness on foreign currencies, gold and silver. So that takes us over to the euro dollar. And since we saw the rejection at that 101.60 level and not just a momentary pause, okay, or consolidation, we didn't see any kind of resistance formed at that 106 level here. We've seen it trade through. So this level, while I wasn't looking for a bearish order block, that's the last time that we saw bullish candles up here and up here. So we have to watch this level. I'll just take this level down here. So it begins here, and we're also watching it over here. So it may be a return back to that level. More specifically, it may be, I like the fact that we had this breaker. We have a short-term high, made a new high here. I like this candle as the breaker, not this one. Even though it's down close, it has that big wick on it, I don't like that. So I'm going to look at this one here over this one. So it could trade up to the close on that candle is 106.84, so it could see 106.80 to 106.85 as an upside for euro dollar. And that would also take us into, yeah, there's nothing in here outside of that. We have a small little liquidity pool that would be resting right above that 107.15. The high comes in at, 107.15. So we would look for a run. If it really gets crazy and starts to, see dollar weakness, we could see euro dollar trade up to the 107.20. So to be mindful of that. Cable continuing to be perplexing for me. It's stuck in this range, like I said we would, on a worst case scenario would be. It hasn't really shown anything here yet, been chopped up. I know some of you have sent me emails about being short in this pair, questioning why I felt that we could go higher, and some of you have went long in this pair and had to sit through yesterday's movement. And some of you actually sent me emails, and Andreas sent me another audio clip voicing his concerns about why he feels disconnected from the marketplace. And I feel that way with cable. So if you're feeling it in any capacity at all, don't feel bad, because I just don't know what to do with this pair. If I had the only capability of trading just one pair, and that was the only pair I ever traded, and I couldn't trade anything else, I couldn't trade right now. I mean, it would be no trades for me, because I can't get a beat on what cable's doing. So since it's stuck, I have to wait for them to cause some displacement and move the price around and outside of this range, because I don't have a high probability level to key off of. So if you're in cable, just know that if you're making money, attribute it to luck. If you lost money, attribute it to the market's not wanting to go somewhere right now. So if you're in it and you can scale out and take a small hit, it's probably better to do that. If you have a profit, get out of it. There's just no reason to be in this pair right now. It doesn't have any clear indication what it wants to do. Even with the dollar, going lower, this thing should have already blown out this high. It should have already done it. It hasn't done it. So it's being held in a range in here. So that means they're manipulating euro pound. Okay, so if they're holding here, the trade's in euro pound, not cable. All right, so dollar CAD, we've been jawboning about this 130 level forever now, and it's finally looking like it's going to get hit here. It might actually happen while I'm talking about it. But we will be looking for a run below the bodies of these candles over here. The wick could be the target, but I'm just more inclined to expect it to trade below the bodies of the candles in here, but more specifically aiming for any run of any kind below 130 at this level. The heaviness on dollar CAD, as we said, would see a great deal of selling pressure if dollar index was bearish. Notice that while the dollar index was bullish, we didn't see anything but a smaller dead cat bounce. But when the sell side came into effect on dollar index, now the dollar CAD wants to join the party and wants to go lower. So hopefully that made sense yesterday when we were talking about relative strength analysis. It gives you at least an ability to anticipate what side of the marketplace you'll see expansion when the market doesn't look like it's panning out or trading in its expected dynamic. In other words, as we have expected higher prices in foreign currencies. The pound dollar has not done so. It's stuck. So if it's stuck, what is it telling you? It means that if it can't rally and it can't sell off, that means it's being manipulated and held in a range, and that means every cross that has the pound in it, those other currencies should be allowed to be traded and trending. And start looking at your homework for this morning. Go through your pound pairs, anything that's coupled with the pound, and see what you find in those specific pairs. I don't trade those kind of crosses, so I stay away from them, but you should be able to see some opportunities in that. Again, watching for that 130 on dollar CAD because of the dollar weakness. Now this is permitted to trade lower. All right, we're still looking for that 77.45, 77.50 level on Aussie dollar. Really nice showing from yesterday's discussion about how we thought it was going to make a run through that 77, make a run up to 77.50. So again, for you folks that have had withdrawal for our intraday analysis and discussions, I'm sure that's probably made you feel a little bit better about being a part of the group. But we still have to keep our focus on the higher time frame. I hate to say it like that, but we still got to go back to doing that because it's part of the process and the course. Okay, so you have to go through that. So just as a reminder, yes, this stuff still works on a lower time frame, and we'll have lots of setups as we get down into the lower time frames and entry techniques to use with short term and swing trades when they form. There's no swing trade yet, so just settle down. But we're looking for the higher price of 77.45, 77.50 still on Aussie dollar. The buyers need to be concerned if we get below the mean threshold of this last down candle, and that's going to be a ballpark number of 76.55. So it needs to stay above that level to be bullish. If it comes back down to that level and has not hit 77.50 yet, I would view that as a short-term high or a potential intermediate-term high, and then it'd probably make a run for the sell-side liquidity after that. So we want to see it stay above this level and keep expanding. It can pause here and trade around and find some support around that 76.95 level or 77 big figure. That's certainly reasonable, but we just don't want to see it come all the way down here. Okay, so again, we're still looking for higher prices on Aussie dollar. Euro pound, let's just take a quick look at that one. Again, it's just right back in its range. They want to buy up euro, and they're keeping pound in a range. So we'll probably see this one want to go a little bit higher as a result if we see euro dollar still strengthen. Gold prices reaching for hopefully our objective. I'd like to see that 1250 level get hit. But be mindful, we have the buys of the candles here, so that's a rejection block. We've got to be careful that we don't see it just go there and then reject. So whenever you're in a bullish market, be mindful of this type of scenario because this is where the bulk of the liquidity is resting just above. Wicks are always going to be the thinnest portion and the smallest liquidity area. Right above the bodies, that's exactly where all the buy stops are for shorts. Not up here, they're down here. Okay, so it could just go right up above that level at 1240, and that may be a catalyst for consolidation or a sell-off. I don't see it here, but we just got to be mindful because we're in a really tight range, and I think it will probably expand up to that 1250, 1255 even, potentially. And you have those equal highs back here on the 4-hour for gold. That's our buy-side liquidity pool. Double tops, we don't ever trust that. That's a big candy land for buy stops. So they're going to probably want to punch that up there and take that out. What we're looking for is to bunch through it and just roll through it. It's just going to be a speed bump for them to take some longs off and then expand for that 1250, 1255. Silver, we've had a little bit of a lethargic price action, even though we made higher highs in here. I'm still looking for 1820. If we don't get it today, it still will be an objective for tomorrow, but I'd like to see it get there this week. It would be nice to see it expand up there. So far, it's just, if you look at what's been going on, it's just been a steady grind higher, 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 higher. No real sell-offs except for this one back here. So if we look at that and we measure from the low to this high, and we had the rollback on price to take out the sell side of the liquidity on buyers, this could be a measured move type thing. So let's take a look at that. I want to show you what we could potentially see in regards to that idea. I'm going to give you two scenarios here. I'm going to give you the wicks. Okay, so that's one range there. So we're potentially looking for 1830, 1835. And on the low end, we use the bodies. So there's our range there. And then we're going to take this same rectangle here, or box, and duplicate it and add it from the lowest of the bodies on the low here, and that gives us this range here. So this could be the low end objective. Okay, so 1820. It was the reason why you got 1820 as an objective back here. So I get questioned like, Kenny, I saw your questions and I was trying to answer them last night on the forum, but you were mentioning a video, and I was looking at the video on the 6th of February, and I didn't see where your time markers were lining up with the questions, so I'm not sure what video you're actually referring to. But I do see your questions about why do I give you these levels. That's all part of this process that you're learning. I'm not trying to give you everything in one teaching because I can't. There's just too many things to talk about. But that's one of the reasons why 1820 was indicated, plus it's institutional level right above the big figure, which you already knew that from the free content. But 1820 on silver was given to you as an objective because of that measured move. And I like to use the buys of the candles, not the wicks. Again, I'm a conservative exit trader. I don't want to take the last piece of the pie. I like to leave some on the table because if I can get out in the direction that the market should be moving in my favor, then I'm okay with that. If I leave something on the table that's larger than I thought, fine. I call it charity. Let the rest of the guys have it. I just want to be profitable. And if I get out with a big chunk, great. But that makes sense. 1820 looks doable. If we continue to see the dollar index trade lower, then that will propel silver and gold, and silver should have no problem getting to that 1820 level. And I think that's it. I did read the forum a little bit last night also in the intermarket analysis section, and there's been some questions to what I was putting on the slides, and I'm doing this by memory, so if I have them wrong, please forgive me, but you'll know what I mean if you go into that thread. I think it's post 24 and post 27. If it's not that, I know one of those numbers were right, but it's basically someone sharing the slide from the presentation for dollar versus stock market or something. One of those slides, excuse me, the question came up is, am I making a mistake there? What I'm showing you is, like, for instance, the stock market and bond market in a healthy uptrend, both are moving in concert with one another up in an inflationary condition. And in a bear market, generally, bonds will be trending lower and stocks will be trending lower. The opportunities arrive when you see that the stock market is going higher, but the bond market is going lower. So if the bond market is going lower, that's the bond price. That's not the yield. Okay, they're inverted. So I'm talking about the bond price. So if bond prices are dropping while stocks are going higher, that's the opportunity you're looking for. That's the utilization. The object of that presentation was how to use intermarket analysis. So the opportunities reside there. And if the market is, if we see stocks trading lower and bond prices are trading higher, but we're not in a deflationary condition, that's a wonderful opportunity to be a buyer of stocks. And that's the opportunity that's being highlighted in those slides. It's not a typo. It's not a misnomer. It's meant to tell you that's where the opportunities reside. That's why I'm telling everyone right now, and I'm screaming from the rooftops, that even though this full move in stocks looks amazing, it looks stellar, and yes, we talked about last week going from up, it's moved almost 1,000 points from where we said it was going to go up. I am not bragging about that. I could care less, because that's going to be insignificant in the grand scheme of things, because I think personally this is that last little bit of a lipstick, if you will. They're putting the fake eyelashes on this pig. Okay, they're dressing it up real good. And at the same time, the bond market's taking a dive again. So if the bond prices are dropping, that means what? Yields are going higher. That's not what stocks like. But if you read the news, they're telling you, oh yeah, it's just good. It's just good for stocks. What? It's not good for stocks. It's going to bring these stocks down. Eventually, the higher interest rate and cost of borrowing is going to be a catalyst, and that's not going to be supportive for stock prices. It simply isn't going to work. So yes, there is a delay in 6 to 12 months. It could be that long. But we already have that factored in. The bond market's already topped in the middle of last year. It's been trading down for over 6 months. So that means interest rates have been going higher. The condition is being primed perfectly. It's textbook. It's classic scenario. It's classic crash criteria. So if we're looking at bond markets trading lower in the bond price, that means higher interest rates are coming. We have the Fed promising, guaranteeing you that they're going to raise interest rates. We don't need to hear them say it. We can see it in the bond. The bond is a predictor of that. It predicts the Fed. The short-term 10-year, it predicts the Fed. It helps you also price in the future and forwards on currencies. That's why we use the 10-year note. They use that for the factoring of the forwards in currencies. Having an understanding of this from a macro scale, it does not give you buy and sell entry points. It gives you the stage at which these conditions promote big, significant moves. In this case, it's a big neon sign. There should be that nuclear bomb warning siren going off right now. Everybody that knows anything about technical analysis and fundamentals as it relates to macroeconomics, this cannot continue. And to see it driving up like this and everybody having this irrational exuberance, because it's ticker tape party right now. But it's only a handful of stocks taking it higher. It's just, this is really, it's worse than when I first started talking about this idea of it's going to crash, I was really bearish. I am ridiculously bearish. I don't see this. It's going to get worse of a fall. It's just so bad. I'm serious. I cannot make it any more clear that this market is going to hell in a handbasket. All we're doing is waiting for a low to be broken. That's it. And it can rally another 1,500 points. I don't care. I would never buy equities or even the index at these levels because I don't trust how they're going to present the repricing lower. I think it's going to be sudden. It's going to be dramatic because they know everybody's expecting it to break. Okay, they know it's going to happen. So are they going to give everybody a chance to get on it? Hell no, they're not. That's not going to happen. So the one short-term low that they break, that to me is going to be all that's going to be needed. Everybody else is going to be waiting for the ABC correction and all this Elliott wave crap. That's not going to be there this time. It's going to be shock and awe. One opportunity. It's going to be probably on a really small scale, 4-hour chart. You'll probably see it clear on that. But we're watching the lows and the short-term lows that are forming on the daily chart on the Dow, NASDAQ, and S&P. And you have to be focusing there. Do not get enamored and falling in love with this thing going up like it is, because it's going to die a very, very painful death. Bonds, they're just telling you the story. It's going to happen, and dollars already supporting it, moving lower with them. So you can't have that bull market in stocks continued like this without having a massive correction, and everything has to get back in line. So who's not following the crowd? Equities. Dollar and bonds are going lower price-wise. It means yields are going higher. Equities cannot sustain this type of movement. And because it's rallied up aggressively, the fall is going to be just as fast. It's going to be just as fast. So just be mindful. We're looking for 18,000 on Dow real quick. Once that short-term low that it gets violated, and it's not there yet, but we watch it. That's all we're doing is we're waiting. And for some of you that are looking at this and saying, well, wait a minute, I'm missing a really good opportunity. I could have made XYZ on a long being a buyer of the S&P. Go right ahead. Like I said, don't let me steer you. You do what you want to do. All I'm saying is if you're doing that, you can get hurt real quick. And they can drop the indices real fast, and they can jump hundreds and 1,000 points in a tick. You want to be caught in something like that? Not me. Not even on a small risk basis. I don't want to be caught in that. And then get stuck in it where they lock trading up, and they don't reopen it, and then they open it several days later, and it's thousands of points lower at the open. Mark my words, I'm telling you, that's what's coming. And I can't make it any plainer than that. So for the folks that do trade equities and indices that are emailing me and talking to me about what they want to do and how they do this and how they do that, just be mindful that I'm not, like I said, I'm only going to update the equities when there's something that needs to be talked about. Right now, the last post we did is going higher. It's gone higher. All I'm doing is I'm focusing on a low. If I talk more about that, all I'm doing is going to invite more emails that I don't want to have about the equity market. You'll know when the crash is coming because I'm watching it. But just don't give me more things to look at than I already have. It ain't there yet. It's coming, but it ain't there yet. So when we have a short-term low broke on the daily chart, that's the catalyst. We're going to wait for a small 1 or 2 day rally after that, and then it's over. We'll be looking for shorts. We'll look for put options on the S&P. We'll be looking for plays in the Dow futures contract. We'll be in there. Just let it happen first. It can't be done now. We have no idea how to frame it or build the idea on it. We have the stage for this event to occur, but the players have to get themselves on the stage and drop the curtain before it's all over with. And then we'll be in there doing something. But right now, let them keep pumping it up higher, because all that's going to do is to make the fall even more drastic than it's already been expected. You are not going to miss it. Okay, so I know some of you, I don't want to miss this. I don't want to miss it. I'm going to make a ton of money on this. I'm not missing this one. Okay, just because I'm not talking about it, I don't want to talk myself into an idea or force something, because I'm that excited about this idea. So I'm waiting. I'm being very patient, and I'm trying to keep my emotions in control and not make myself take a trade sooner than I should. So I'm allowing the market to break a short-term low on the Dow. And once that happens, I will have what I need. And then we'll start talking about the equity markets on a day-by-day basis. Because once this thing cracks, it goes lower, it's going to be fun. We're going to have all kinds of things to talk about. And it'll be very exciting again. But right now, just let it take course. It can't be forced, and it can't be taken before the fact. Okay, there's nothing to trade on yet. So let them break the market down and take out a short-term low, and then we have it. We'll wait for a 1 or 2 day rally, and it's over. We'll sell short. We'll be buying puts. But we have to have a short-term low break. That gives us the reason to go in looking for strike prices on puts. You're asking me questions I can't answer right now. What strike price should I be buying right now on puts? I don't know. We haven't broken the low yet. Nothing says this thing stopped yet going higher. But the conditions are there for when it does break a short-term low. Whatever that high that formed prior to that, that's it. That's the high. The market will crash from there. But you have to let it do what's required. It has to break some short-term low to indicate that market structure is broken. Once that happens, we have a green light go to go in and start looking for put options. And then I'll tell you what strike month, everything. You'll know exactly what I'm doing with mine. So that way, if you want to follow along, it's on you. But that's got to happen after we have breaking short-term lows. If it doesn't happen and it keeps making higher highs, all we do is keep referencing the new higher low. And we just keep watching that one. When that short-term low breaks, trust me, it's going to be quick. It's going to be amazing when it starts to fall. It's going to, believe me, everybody else is going to be saying WTF. And they're going to be freaking out. But we'll have a calm head. We'll know exactly what we're doing, why we're doing it, and there won't be anything except for smiles. So just relax and let that thing do what it needs to do technically. And because fundamentally the stage is set. All we're doing is waiting for technical to get in line. And this is where patience has to take root. You can't force it. But there's plenty of opportunity that's going to be made in that move. And believe me, don't worry right now. We have plenty of other things to talk about. And like I said, this thing could potentially trade all the way up into July. It can consolidate and keep making steady little higher highs. Great. I hope the bond market crashes from here. And then it's a dead ringer. This thing's going to go to hell. Equities are not going to contain a continued bull market with these conditions. It just can't happen. So that's the business, folks. We're going to close it here. Just be mindful. Keep watching that 1820 level on silver. And let's go one more quick pass through just on the markets. Just get it one more quick look at it. Gold's almost at our 1240 level. Just again, watch that. We want to see it really trade through that aggressively. Aussie dollar consolidating above 77 big figure. That's permissible. Be mindful of that 130 level intraday today. If we get some roll through, if we get that, we want to see it expand through, not just punch its low through it by a pip or two. We want to see it expand through that and then make a run for the liquidity over here on these bodies and maybe even reach for this. And that might be tomorrow, but nonetheless, that's what we're looking for. And cable, I wish I had something to talk about, but I just don't know what it wants to do. And again, we've already talked about where this may go up to in terms of an upside objective and dollar index. We'll be looking for it to trade down into this level here, 100.44. And that's it, folks. I'm going to close it here. If you have any questions, again, if you're just sending them blindly into the forum, I don't haunt the forum because it's a big time consumer. So I know you guys like to talk amongst yourselves, and that's why we have the forum. But if you have a question and you just tossed it out there into the void, expecting me to see it, I just don't have enough time to go through every single post and every single thread that's on the forum. I couldn't be able to keep up with it. I can barely keep up with emails over the course of 3 weeks. The demand for that is high. So if you have a specific question in mind, again, the protocol is to make a post in the forum and then send me a tweet with that link into the forum so that way I can say, okay, I'll click on that and there it is. But if you're going to ask me something about a specific video, please tell me the date of the video and then where in the video it is. Because if you just talk about, oh, I watched the video with XYZ, I don't know. I don't know where that is. So you have to give me a link or tell me the date that video was produced and shared. And then I can go in and watch the video where you're actually having an issue and I can answer your question. It saves me time and it makes it more efficient for you to get your answer. And that's it, folks. I'm going to close it. And we'll have a live session again tomorrow at 8 a.m. I'll have a little bit more of a teaching session for you tomorrow because I'll have all of our weekly teachings done so I can spend a little bit more time intraday with you with stuff about intraday for the 4-hour chart. I'm sorry, for the 4-hour chart, we can talk a little bit more about that. But that's it. I'm going to close it here. Have yourself a very pleasant day. And if you're trading, good luck with trading. If you're not, good luck paper trading. I'll talk to you tomorrow morning.